This is the current stock market update for SoundHound AI, stock ticker SOUN. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. This is the daily time frame for SOUN stock, and as we can see, this really gives us probably the best viewpoint of the recent trend rallies and declines that are currently governing share price action. After the stock fell from about $25 per share, we did see that major crash into about $6.50 or so. You can see down here. And then we also saw another fairly significant rally. So this is a tremendously volatile stock, and it does suggest that, if you're a stable investor or something like that, conservative investor, someone who's more interested in just protecting their assets, SoundHound might not be the right stock for you. This is not necessarily to say that it is a bad company, but this is what happens when we trade stocks that trend heavily on social media. We get very erratic behavior. In this case, we also saw, if we look at this Fibonacci analysis, what we can see is that the stock actually broke above its 78.6% Fibonacci retracement zone, which in most cases would call for a full retracement back to that $25 mark. But the market was not able to do that. And I think that the main reason for that, I think we can look at the trading volumes as the main reason for that, because, as we can see, if we just kind of go back in time here a bit, there's a lot of trading volume here. This is really social media hype that's driving this thing at that point. We can make some outlines here about the trend highs for the volume readings that we're seeing, because what I want to do here is just make it clear that, we're definitely seeing a diminished interest in this name. And if you're looking at meme stocks, and I will continue to call this a meme stock, even though it's a better company than, say, AMC or something like that, it trends heavily on social media, and social media distorts the valuation of these types of assets. So, what I'm kind of pointing out here is just the fact that overall interest, Google searches, posts on X, YouTube videos, and things like that, these are starting to decline in number. And, that can have one of two effects on a stock. It doesn't necessarily mean that the stock has to decline, but when you're dealing with a heavy retail name like this, it's probably going to have a negative effect. And this is why we do not trade SoundHound in the Discord trading room. We find stocks that are trading completely under the radar. Now, I do want to look at this specific structure here because, there are some clues as far as where the stock might be heading next. One thing that we can point out here is the fact that, as we said, there was this series of lower highs, but we have not yet seen a series of lower lows. As we can see, for the most part, these two lows roughly match up. The recent price low is maybe slightly higher, but for my interest, I would still refer to this as being a major support zone near $6.50. In addition to this, the indicator reading is starting to roll over out of oversold territory, as we can see here. You have the MACD reading, MACD indicator, starting to move upward out of oversold territory. And if this does occur, you've got a lot of room here to extend to the top side before you start to become overbought. So when you pair that with the fact that there is a support zone here that's relatively close, at least from a chart perspective, you can make the argument that that's a fairly strong buying signal. It should be noted that what we're doing here is we're not relying on one trend signal, which is what most people do on social media or on YouTube. They just sort of see maybe like a moving average crossover or something like that. They see one technical chart signal and they say that that's enough of a reason to buy. That is never true. Let me repeat that. That is never true. If you are trading based on one signal, you are going to lose over time. But in this case, what you have is a bit more of a confluence of events, a combination of signals that suggest the stock might be starting to move higher. You've got this low indicator reading that's starting to roll over. You also have these green trading bars here because it's called a ribbon twist in the MACD reading here. You've got this element right here. That starts to give you the positive green trading bars. And if the MACD itself can move above the zero line, which would be this area here, you would then have a third chart signal, which would suggest that the stock might have found a bottom near $6.50. It could be argued that we're also starting to see a little bit of an increase in trading volume here. Now, it's not a substantial increase, as we can just go back in time a little bit. Say back here, for example, when the stock is moving to 22.15, you see a lot more trading volume, a lot more trading activity. This is much lower, much more subdued, but it is larger than the trading period that preceded it. So, as we can see here, the trading volume is kind of a little bit lower, and now it's moving a little bit higher. So it's not a substantial difference, but I would say there is some difference there. And that might suggest that maybe there's starting to be a bit of a resurgence. And normally I wouldn't point this out. I wouldn't care that much about a slight increase in trading volumes, except for the fact that you are trading near a very significant historical support zone near $6.50. Finally, I'll just point out where the stock price is relative to the exponential moving averages, because this is going to be important too. As we can see, the stock is starting to break above some of these EMAs. We've currently broken above this red line here, which would be the 20-day exponential moving average. And then you've got a series of different moving averages here that continue to move higher. These extend until roughly $11.50. So if you did see a break above there, that would really be a better indication that the trend has actually started to change. Right now, share prices are trading inside of the exponential moving average cluster, so that's a bit more of a neutral reading. It might suggest price action more sideways, something like that. But it is certainly better than trading below the exponential moving averages, because as we can see here, when the stock started to fall below these red and yellow and blue lines here, we can see what happened. The stock just completely crashed, and then you started to see major extensions here in the bearish direction. So, it is important. It is an important factor to watch because it's a major indication of momentum. And when we combine all of that with our prior analysis of the MACD reading, rolling over out of oversold territory, it's possible that you're starting to see a bit of a trend wave reversal here from these lower levels. So just remember that and consider joining the trading room, because this is the type of analysis we do there. We do not buy rallies, we buy declines. We buy major declines. We only buy stocks that are under a significant amount of selling pressure, because that is the way that you generate the best returns over time.